So here we are in extremely strange times indeed. And I thought it would be just worthwhile just for me to introduce who we are. I know that some of you know me, but perhaps I'll just tell you a little bit about me for those that don't. So this is my 30th year in business, literally at the end of October. It will be 30 years. Clearly started when I was very young indeed. And over that period of time, we've completed some 400 transactions. If you like, our speciality is it's not sector specific, but in terms of the types of people that we work with, it's almost exclusively owner-managed business or private equity-backed businesses, and that's what we know. After all, that's what we say we are. As well as doing corporate finance, we do all sorts of other things. We act as non-executive directors for people. We deal with shareholder disputes. We help people raise money. And so we've got a variety of tools in our sort of box of tricks to help take you through the journey from start to hopefully a successful exit, whatever that might be. So little bit of what's going on in the market. But no surprise to anybody out there that deal volumes in Q2 had a significant drop. And the Office of National Statistics is estimating that it's not going to significantly improve, certainly in Q3. And I don't really see too much activity, really, and probably until Q1 of next year. However, bearing in mind that it probably takes at least 9 to 12 months to get a deal away, if you were looking to sell in 2021, it would probably be an opportune time to start talking to us now. Poonan was telling me this morning, Poonan is my MD, that we only put a business on the market a couple of days ago, and we are already sending out a number of information memorandums. Now, this is a very nice business. It's in a nice, sexy area, but it does show that people are definitely buying. There's a publication that you might like to look at when you're looking at an estimation of your business, and it's called the Private Company Price Index. And that tracks the average multiples of business sales for privately owned businesses. And at the end of Q2, it was tracking at a 10.1 times multiple. Now, if there's anybody out there getting really, really excited and say, gosh, I need to instruct Joe, that's fabulous. We probably need to put that into a bit of context, because most of the deals that are tracked on the PCPI tend to be larger deals. And frankly, the larger the deal, the higher the multiple. But there is definitely organizations out there who are awash with cash. And even those that have been hit by the COVID pandemic are still wanting to do deals. And there's just a little sample of some deals there for you to have a look at. And as you can see, they are large deals. But we are as busy as we've ever been. What is important is to make sure that if you are selling your business, that we put in front of you the people who have got the money and aren't on a fishing exercise. And we like to think we're very good at sorting out the wheat from the chaff. So one of the propositions that companies who are cash rich at the moment is now there are some opportunities to be picked up, and they are going to negotiate hard, and deal structures are definitely going to probably have some element of an earn-out. Earn-out structures isn't something that's always very palatable for vendors. On the other hand, if it's going to get your deal away, and you believe in the strength of your company post-COVID, then it should be something that you should not turn away. There are, of course, other ways of getting a second bite of the cherry, and that is what we call a put and call deal, where you sell a proportion of your business now, bank some security, and then you have a deal that is immovable. That means you put your shares, the balance of your shares on the table at a point in time in the future. A multiple is used that is pre-agreed, and then you sell the balance and the buyer has to buy them. And that can be a way of sort of giving you a bit of comfort, if you like, but also allowing you to participate in an upside at a later time. Going forward, and I'm going to talk about this in a little while, something called an employee ownership trust. which is another way of succession planning for, particularly for entrepreneur-owner managers, is definitely going to become more mainstream. And I'll tell you about that shortly, but just to put it in your mind that our own company did an EOT earlier this year. So I can talk absolutely from first-hand experience of how positive that is. So they say there's only two things in life that are certain: death and taxes. And I think we can definitely say that there's going to be a lot more tax to be paid. £2 trillion in debt at the moment, and ever increasing as the lockdowns seem to be now racking up again. We only need to look at the Mayor of Manchester, and people are not going to put their cities and towns and counties in lockdown unless the government gives them more money. And eventually, we're going to have to pay that back, and the people that are going to have to pay it back are the people who are fortunate still to be working. I think Rishi and his team of merry men are going to attack all sorts of taxable profits. I think they're going to increase income tax. I think they're going to increase corporation tax. I think they're going to take a serious look at inheritance tax. And entrepreneurs relief was already on the cards, but of course the budget was paused back in March, and entrepreneurs relief dropped from £10 million, where you only paid 10% tax, to £1 million. The rumours were, and I think if COVID hadn't happened, it was definitely going to be the case, that he would get rid of it completely and either align it with ordinary capital gains tax, which probably sounds fabulous compared to the alternative, which he would align it to income tax. So you could end up actually spending significantly more on tax if these changes come into place. Now, I don't think he's going to do anything very quickly on this, because once again, there's rumours this morning in the papers about they're not even going to review their spending bills until I think they know how much they've got to repay back. So again, I think this is important for you to think about. What are the options if your tax gains are going to go up? So if we go on to the next slide, Rachel, there are various ways of exiting. So a trade sale will almost certainly give you the highest value, because the trade buyer has got synergies that other options don't have, because they have got not only buying synergies, but operational synergies. So don't need two finance departments, don't need two sales teams, don't need two headquarters. They can sell their products into your customers, and you can put your products into their customers. So there is always going to be the best option in terms of value. And when we talk about trade sales, the majority of business that we have done at FDS in the last few years have been cross-border. And with what's happening with Brexit, well, if anybody knows what's happening with Brexit, could they please send me a quick note? But everything with regard to Europe and our friend Mr. Trump is going to provide opportunities as well as risks for cross-border transactions. And we've found those absolutely to be something that shouldn't be ignored. So the next typical buyer stroke investor, and I say that because with a private equity sale, they don't necessarily always take 100% of the business. The beauty of a private equity sale is that they have got very, very deep pockets, and they haven't been spending. They want to do transactions because their investors are going, what do you think you're doing? Why aren't you spending our money that we've given you to invest in businesses? So they want to do transactions, and they can be a lot quicker, but the margins in terms of multiples are generally not as good. Also, almost always with the private equity sale, the vendor will be required to stay on for probably longer than they would with a trade sale. Because with a trade sale, they've probably got a ready-made team to make the new transaction more effective. But with a private equity sale, these are a bunch of accountants and lawyers, and they're not going to be able to run your business. They're going to want you to stay on for some time. But they do have pots of money at the moment. And then, of course, there's the opportunity to sell your business to the management. And an MBO is probably something that you are very familiar with. And this is where your current management team look to see, can they do a deal with the vendor to acquire the shares of the business? Now, this has been very attractive for many years, but it comes with complications because the management rarely have any money. And of course, unlike the trade sale, they've got none of the synergies that a trade sale can offer. Sometimes, of course, the management team isn't complete and there is a missing component. And if that missing component is the vendor, then what you might want to do is change the MBO into what we call a bimbo. That's not the blonde on the other side of this screen, but the bimbo being a buy-in management buyout. So you bring a third party to join that management team. And that actually can help increase the potential value because the funders are going, well, we've got internal skills, a management team that knows the customers, etc. And now we've got an external management candidate who is bringing more to the party and possibly money. Almost always with a management buyout, the vendor will have to do some sort of loan notes. And by that, I mean, they're going to have to wait for the money. And almost always they will be subordinated to everybody else at the party. So a VIMBO may be less familiar with it, maybe less familiar. But because management teams rarely have any money, so finding good advisors who are prepared to do it on a pro bono basis or on a let's wait and see if the deal completes basis can be a bit more challenging. Also, it is a bit of a problem for a management team to negotiate with a vendor to buy a business that they believe they've created, or at least been a very significant part of. So with a VIMBO, it's much more of a collaborative process, with the advisors acting, if you like, almost as mediators and sometimes referees to help get a fair deal for both sides, negotiate a good structure on that, and help the management team find the money. And then there is the EOT. So even though these have been around since 2014, I think you may be surprised at how few there are. So there are less than 500 EOTs in the country. I mentioned at the beginning, I sold my business to the EOT. So let me explain briefly to you how an EOT works. So this time, instead of selling the shares to the management, you transfer the shares into a trust company that owns the shares on behalf of the staff. So no individual member owns shares, but they benefit pro rata to a variety of conditions, and those conditions can be salary, length of service, hours worked. So that when we did this with Poonam being my most senior person in the company, she pro rata gets the most benefit from that in terms of bonuses, dividends, and future value if the EOT is sold. So the beauty of this is that the management team don't have to find any money personally to do the transaction, but unfortunately the vendor may have to wait for some of their money. However, the good news on this for the vendor, unlike an MBO, a private equity sale and a trade sale, is that any proceeds of an EOT transferred to the vendor are completely tax-free. So while at the moment we're looking at entrepreneurs relief at 10% on the first million and 20% on anything over that, and then whatever our friend Rishi does, there is a significant tax charge. On an EOT, there is no tax charge at all. So to complete this process on an employee ownership trust, we have a trust company that has to have an independent trustee on it. The vendor can sit on that trust board, as do I, and an employee representative, which in our case is Poonam, my MD. I have still remained as chief exec of our business, so the board runs exactly as it did before, so the company runs exactly as it did before. So the benefits of this are that your staff get the business. When they leave, they do not take the shares with them, but it's obviously a great incentive to engage with new potential staff. And of course, the tax advantages are very clearly evident. So the next slide, Rachel, So valuation. Poonan and myself have just come off a very interesting call with a client who's this time wanting to buy a business. And he was saying, you know, will you do a valuation? And we can definitely do a valuation. But as I said here, valuation is very much a personal position. So this particular company that we've just been looking at is a very modest company. But if my client decides to buy this business, the value of his business will go up exponentially because it is such a complementary product, and it will allow him to access markets that he can't currently access. So the value to him is significantly more to, say, another manufacturer, because he can make 2 and 2 add up potentially to 22. It really does depend very much who your buyer is. Now, valuations are a technical process, and there are lots of ways of doing this, but I just thought I'd give you a little bit of an insight into the more common ones. So the most common way of doing a valuation is a multiple of average normalized EBITDA, and you times that by the relevant multiple. So what I mean by normalized EBITDA is that is adjusted, because in many owner-managers businesses, of course, there are costs that may not recur if it was sold to a third party, whether those be discretionary costs or whether they be one-off costs that you've incurred in a period of time. Equally, there could be costs that need to be added, because if you haven't actually made yourself completely redundant through this process, then, and you've been paying yourself a dividend, then we do need to think about how your costs would be replaced in that. Clearly, this doesn't work for an early stage business or a pre-revenue business. And Poonan and I
seems like Joe's just frozen.
They're just working with a, oh dear, am I here?
Oh, you're back.
Pre-revenue business, and we valued that business at £22 million. So clearly this doesn't work for all kinds of businesses. It's just giving you some examples. So as I mentioned earlier, the PCPI multiple is running at 10.1 times for Q2. And there are still people wanting to do deals, but it really does depend on the nature of your business. I'm going to give you a bit of insight into some of the industries that are very sexy at the moment. Clearly, if you're asset-rich business, a multiple of profits may not be the right way to value business. So we would look at a net asset valuation, and that is much more complex than you may think, because it's not net book value of assets, plus goodwill. And again, we come back to beauty and how do you value goodwill. We have some technical ways of valuing goodwill, but again, depends on the synergies of the parties. And then, of course, there are different methods for different industries. So, for instance, IFAs are sold on a recurring revenue basis. Insurance brokers are sold on a recurring revenue basis. So, again, it depends on the industry type. Could we have the next slide, please, Rach? All sorts of things affect value. I've just mentioned to you about this client we've just come off the phone with. If he buys this business, he will certainly have to pay a premium, because he really wants it, because he knows it's going to add so much value to his company. So that is definitely one thing. Making yourself the least most important person in the business is hugely important, because if we don't do that, any cost that you've been incurring, it's going to be a negotiation of how you're going to be paid in the future. And also, I suspect many people in this audience are probably unemployable. It's very difficult to work for somebody else. So, of course, the beauty of an EOT is you're not, because there is no change of guard. If you haven't got a good quality management team, then that makes you much less attractive to private equity investors. And I hate to say this, coming from a finance background, but the finance professional in your team is very important whilst going through the process, but they are the most dispensable person post-transaction. But it's the salesperson, the marketing, the operations, the technical people that will make a huge difference to the value of your business. If you've got more than 20% of your business in any one customer, that is going to potentially at best dilute the value, and at worst you could have to carve out some sort of guarantee or indemnity until that is diluted. So what's hot? Well, gaming is top of the hit parade at the moment. Not only can the organisations who are involved in this, not only can they not get the developers, but the multiples on gaming, and in fact any internet businesses, are double-digit numbers. And I mean double-digit, sometimes 15, 16, 17, 20 times profits. So anything related to IT. Of course, as you can imagine in this market, anything related to the health sector. So anybody that's making anything to do with masks or plastic gloves or screen dividers are doing extremely well at the moment. And then, interestingly, recruitment. And I've said specifically there, temporary recruitment, because, of course, everybody is a little bit worried about taking on perm appointments. And then, I'm not sure whether you'd be surprised or not, but luxury goods are also thriving, because that market just has not been affected, because those people are always going to spend that sort of money. So anything in the luxury goods sector is not being affected in the same way as more traditional businesses. And of course, the final thing that really affects value is any contractual income that you've got. So worst, some sort of framework agreement, brilliant, some sort of license or distribution agreement for X period of time. And of course, the longer the period of time, that is the better. Thinking of things like that, think about change of ownership clauses, because I was looking at something recently, great contract, 5-year contract. However, unfortunately, it said if the business owner changes, then all bets are off. So I've just had a little message from Peter. Oh, and it's just gone, that message. I don't know if I can get it back up again. I've got it.
So data analytics, Joe, and artificial intelligence businesses, I notice in Leeds, they are all over the place. Data companies, anything to do with sophisticated geeks doing fancy things with billions of terabytes of data.
Absolutely. But anything in the tech business is just going stratospheric. You know, that's really where you want to be, if you can get the staff to work in them. I mean, one of my clients runs a tech business. It's run by this child. Well, he looks like a child to me. He's just the most amazing entrepreneurial guy. Getting developers for his business straight out of university, and this is in Manchester, is having to pay 70,000 to 80,000 a year for a university graduate.
Leeds is the same. Leeds sucks up lots of data people, and unfortunately Sky Gaming sucks up the biggest a lot in Leeds, and they pay enormous amounts.
And of course, you know, you're competing, if you're in the north, against companies in the south where these same graduates can go down and earn 120,000 a year. So the only problem with that is getting the staff to fulfill the product development. But these are the markets to be in. So just take you quickly through the process, which is very self-explanatory. So we would always recommend start with evaluation. It's a bit like if you're going to sell your house. It's a bit pointless just putting your house on the market and hoping you'll get an offer. We need to know an idea of what the probable value is. Now, that isn't to say that's what you'll get. Hopefully you'd get more. And particularly if we work with you, we are always conservative on valuations because we don't like to over-egg it. But, you know, it depends who that buyer is, who your partner is. Then, and this is so often overlooked as well, is next to take advice from a tax expert. Because structuring the deal tax-wise can change massively how much you net at the end of the day. So, for instance, if you're selling a division, then the proceeds of that division are going to Topco, and the only way you can get them out is a dividend. So it could be that there's some sort of demerger to do. And all those things need planning in advance. If you plan sufficiently in advance, it might be an idea to spread some shares amongst other family members or colleagues. So the tax advice is very important. So because we know we're in a very, very open world where everybody knows everything about everyone, but be very careful how you actually go to market. So we don't do machine gun approaches in terms of a sale. We will carefully analyse who wants to buy this sort of business, and most importantly, who's got the money to do it. because, you know, having the wherewithal is great, but if you don't want it, you won't move into the next stage and vice versa. We then produce what we call a teaser document, which is basically a summary of the key benefits that the business has on a no names basis. It's a bit like the estate agent's picture, you know, of the house in the sunshine with a beautiful cut garden. You just don't necessarily show all the bins behind and so on. What we wanted to do is attract interest. Simultaneously to that, we're producing a much more comprehensive document, which is telling you not just about the history, and sadly I see too many which are all about history, but rather telling you about what the potential is, and we call those hidden assets. Now, more important than ever, it's very important to get in front of the buyer as quickly as possible. And we all know we don't actually physically have to be there, but a management presentation brings to life the information memorandum and allows the vendor and their management team to answer up-to-date questions. I know Poonan is just arranging this with a deal that we only put on the market yesterday. The vendor is going, I'll just do it on my own. And we're going, no, it's really important that the management team come to that, because it's the management team that they're buying, not just you. And so it also gives you the opportunity to bring things up to date, you know, hopefully with good news. The process then is generally run by a controlled auction. And by that, I mean, you are asking prospective buyers to make a bid. And that bid cannot just be a number, because it is rarely that a deal fails because of value. Deals fail because of terms. So all transactions that we are involved in ask for a very comprehensive offer letter. How much is it? When's it going to be paid? How are you going to fund it? What are the key terms of the deal? And then we will sit down with the teams, the vendor and the other shareholders to look at which is the most suitable. Now, having said that, and I'm talking to you live on what's going on, Poonan has had this morning somebody who says, I don't want to do an auction. I just want to buy this company now. And we are very wary of that, because you can end up in a one-horse race. And the trouble with a one-horse race is right at the last hurdle, they can fall over, or worse still, they can hold you to hostage. So I always get a little bit concerned about going down a soulless route, and I know Poonan is doing her best to persuade the client not to do that. And of course, if they do, they're going to have to offer a shed load of money and probably put some money into an escrow account. If it all falls over, all bets are off, we keep the money. So now, once we've decided on who the buyer is, we have a formally drafted heads of terms, which the buyer drafts. Heads of terms are not binding. The only things that are binding are confidentiality. So this is not the time to open the champagne. Poonan and us, myself and the team, have been, you know, thinking, yeah, this is brilliant. And then all things start to change. So you don't celebrate at all until the money's in the bank. And we very often ended up on the second buyer because something's gone wrong. So as soon as you've got heads of terms, one of the important things to do to keep your deal on track is to make sure that the buyer starts spending money with advisors. Because as soon as they start committing to due diligence and legals, they are more bought into the transaction. So we are encouraging this sort of activities to start as soon as we've got heads of terms. And so legals, due diligence running simultaneously through eventually to completion. So this whole process is probably 9 months. Bearing in mind that very, very little happens in December. Having said that, we have completed deals in December, and I usually say nothing happens in August, but this hasn't been a normal year, so nobody's been away. So deals have been a little bit more all over the shop in terms of timing. Okay, Rach, so, excuse me, the next slide is, we have a little saying in our office that delays cause disaster. So deal momentum is absolutely vital. So the job that we take ownership of is, if you like, project management. So we are constantly chasing up everybody. That's the vendors, the lawyers, the due diligence team, the accountancy, and of course the vendors themselves, because you are going to be very busy with this. Because if you think you're busy now, wait until you are being asked 300 questions from all the advisory team and from the vendor, and from the buyer. So the more you prepare for that, the better. And we have a due diligence checklist, which we urge our clients to start putting together way before we get to the due diligence process. And I also intimated a while ago that sometimes you end up with the second buyer. And so it's very important to keep everybody happy. So even if you've turned down a number of offers, you have to do it very diplomatically, because you may have to go back to them. So we're very good at keeping friends with everybody else. We also say that it's a sad fact that some deals do not complete. And so it's very important for the vendor and the team to not give up on the day job and to keep going and doing what you always would do. We like to think that we're at the other end of the phone if you say, look, I'm thinking of buying a piece of land and it's £1 million. What do you think? And we're probably going to say, perhaps it could wait a little while. But basically, keeping the business going is really important. So, you know, the old military saying, plan for the worst and hope for the best. I think our next slide just shows us our contact details, and we have got another little webinar coming up on the role of the non-exec director. If anybody's interested, please do have a look at that. But it's been great to speak to you, and do get in touch with us if we can help further.